Good morning, good morning, good morning. How's everyone doing out there? What a week it's been. Just going to zoom in a little bit here on this price chart so we can just get the opening price action to the present. Still well within that 20-minute opening range so far. Let's get a sense as to where the options activity interest is so far today. Pretty decent variance between the calls and the puts, and we can see there's a good amount of resting bid right around this hot put, 52.80 on ES. So we'll be keeping an eye on that level here. Now, 5250 was a pretty important level on SPX. That was the largest level of gamma positioning on the chain. It's become a bit of a call wall now. We can see that above us, so it could provide some potential resistance in this trading environment. We do see interest in calls a bit above that level, just about 10 handles above, around 5320 ES. And on the options flow side, mostly bullish flows outpacing bearish flows. And of course, NVIDIA, the star of the options market as usual. Lots of flows into NVIDIA today. We'll take a look at those real quick. Largely on the bullish side. And they just keep flowing in right now. NVIDIA 930s and 950s to expire next Friday. Attracting over 500,000 a premium. About really, let's see, 170, 130, 300, 450, 600, about 800,000 in premium in the first 30 minutes of trading, first 45 minutes of trading. But really, all of this premium in NVIDIA, the 800 I've just talked about, came in the last 15 minutes. If we go back all the way for the entire trading day so far today, we're looking at well over 2 million in premium thrown into NVIDIA calls of unusual size. Lots of sweeps there, lots of interest there, which is the norm, right? And everyone wants to just be massively long NVIDIA in this environment. So I'm going to turn down the music. We'll get back to that later. We'll just focus on what's going on in the market here. We'll take a look around some of the other areas of interest. We've got the NASDAQ on screen here, just pushing below that VWAP and testing the point of control for a third time now. Not a lot of conviction in the selling here. We can see that with those delta bubbles a little smaller. But we're seeing a little bit more now. Now we're seeing some sellers actually get a little bit more aggressive on the NASDAQ. Let's take a look at the Russell. Russell has a similar look here. Crude oil trading back down to 80 bucks and change. Getting a little bit of a corrective move lower after some reasonably good strength going into this week. Gold also coming down a bit. But overall, you know, from the earlier session, it's still up off of its lows. 2-year note, pretty flat. Not a lot to see there. A little bit of a bid, but overall pretty flat. And the euro, let's just zoom out a little bit here. Pretty much just consolidating. Not a lot to see there. NVIDIA, though, there's the monster on screen. We could see the options impact. We're going right to that 930 level. That's been a key target of call buyers this morning, as has 950. And what do we see on the screen? Resting offers in those two key strikes. Because there's a big relationship here between the options market and price discovery in shares. That's the key. We see it every day. We see it in the S&P 500. We see it in the most popular optionable stocks. It's a consistent theme. And that 950 level would be pretty substantial resistance. But let's see what we do here at 930. More NVIDIA 930 calls coming through really in the last 5 minutes. Another 215,000 in premium. There was a little bit of NVIDIA hedging today earlier as well, but nothing in comparison to the size of the call buying. SMCI also rebounding off of its lows recently, but still well below its highs. NVIDIA seems to be the leader today. A lot of these other stocks looking pretty choppy. Look at Meta on screen here, just sort of chopping sideways. Meta's the number 2 of the Mag 7, or really the Mag 2 at this point. I mean, we really only have 2 of the Mag 7 stocks really performing well this year. On the other side, you've got Tesla, Apple, and Google underperforming the S&P, no longer really magnificent. Amazon's doing okay this year, but still underperforming Meta and NVIDIA by quite a lot. We saw some decent absorption there at those earlier sell attempts, but now not so much. Microsoft coming off a bit. And Apple still, just really the struggle with Apple is pretty real. They are getting a decent bid today. This 170 level where there's enormous resting liquidity on the bid, likely to be an area of support for the stock. But this is a company that just can't get out of its own way. If you look at what's happening with Apple, it's kind of discouraging. They really haven't been able to do anything with AI. Their, endeavors in AI seem to be ending up like their endeavors with a self-driving car. And that's a little concerning for a company that's made a lot of grandiose promises about future technology. And for the last 6 quarters, they've struggled to grow revenue. And if you adjust out buybacks, they've struggled to grow earnings too. You could argue buybacks have been the financial engineering that have made Apple look better than it really is. Let's take a look at Google here. Got a huge resting liquidity up here at 152. Wouldn't be too surprised if that acts as a level of resistance in the stock. And Tesla's not having the best day, but this is a company that has been struggling for a bit. It is off of its lows, but it's down about 1.9%.
Taking a look at the Fear and Greed Index, 73 out of 100 equaling greed. And the Crypto Fear and Greed Index, 75 out of 100, also equaling greed. And taking a look at the VIX, currently down at 0.39% at 12.86.
And the semiconductor ETF, a bit of a chop, but semiconductor flows into calls over the last several weeks have been rather extraordinary. And we've seen some of these things get into levels of skew, where that's the difference between premium paid for calls and puts, where it suggests there's really no concern for downside. We saw that with NVIDIA before it had a bit of a pullback, and that corrected a bit, but it's still pretty wildly bullish, lopsided skew. And if you look at the S&P, similar look there as well. Skew pretty lopsided 3 months out, looking at levels we haven't really seen in almost 20 years in terms of the lopsidedness. So we could argue this is not a very well hedged market, but we also have yet to have a sort of a risk-off event volatility catalyst. So it's been an interesting dichotomy, to say the least. Flows have been stretched, sentiment stretched, positioning is stretched, skew is stretched. You know, it's a bit of a tinderbox, but we haven't had a match. If we do, you could have some pretty serious de-risking from folks that were buying these highs. But for now, it's sort of smooth sailing ahead until something like that really comes into full view. You can see that sellers are reluctant to push this thing too hard because they get their faces ripped off every time they try. Speaking of sentiment, we did get some additional sentiment and positioning data yesterday. Let's just have a quick look at the NAAIM survey and the AAI. NAAIM came down marginally to 93.22 from 104.75. And what we're mostly seeing in that is they are trying to put on some hedges. So bearish positioning in the fund manager survey increased modestly, but we are still rather stretched overall in terms of long positioning. AAI came in with retail less bullish, looking out 6 months, quite a bit less bullish than 2 weeks ago. 2 weeks ago, we were at the highest level of bullishness, 51.7%, that we had seen since December 20th. Now we've retreated, looking 6 months out, only 43.2% of retail surveyed are bullish. And bearishness is up from the 3/6 survey, March 6th. Bearishness was 21.8%. That has risen to 27.2%. So retail is a little bit more skeptical of this market than institutional investors based on this survey and the contrast between the positioning we see from NAAIM. The caveat there, of course, is people can feel a certain way, but that doesn't necessarily reflect their positioning. So you could be, fully long, 100% allocated long in your portfolio, but not be super bullish looking out 6 months. So I look more at bullish extremes in AA. I look more at that as being interesting than retreats and bearish extremes, because the bullish extremes are usually telling you, hey, people are really loading up, probably with some degree of leverage. Whereas when we come off of those extremes, and particularly when we go into bearishness, well, most of us retail folks are long only. In fact, most of the world is long only. I mean, if you really contextualize how short selling works, and this is not discussed too often, but it is a truth. It's a universal truth. Very few people who are short sellers are ever net short across all of their portfolio. It seems odd, right? It doesn't seem like the way you would contextualize it. Oh boy, they must be super bearish, short everything, S&P to zero. It's very rare that real experienced short sellers are ever net short. Often is the case, they're running a pair trade, they have long exposure. Longs always do better at the index level over the long run. You can't just be shorting the market. It's got to be very tactical. It's usually got to be a very short time horizon, right? So when they're doing this, one way they guard themselves is they run pairs. And that's one of the reasons I'm a big fan of pair trades, because I feel like if you do it right, you're able to capitalize on minimizing your risk, shorting some of the weaker components, sectors, industries, regions, commodities, whatever assets fit your model. And you're able to go long areas where there is relative strength. And you can get the benefit of both sides working for you. A great example of that last year was my long Japan short China trade, which I put on twice, and each time was a double-digit winner, and it had everything to do with both the macro overlay, you know, the change in what's happening in Japan, strengthening, the change of what's happening in China, further weakening, but also momentum. Stocks were telling us through their price action that there was opportunity to the upside in Japan and still room to fade China lower. Now, those trades were closed out last year. I'm not as wildly bullish on Japan. I'm not as bearish on China. I don't think that the risks in China have been resolved. So you're going to get some episodic opportunities to trade China, and that's fine. But in terms of investing in the country, nothing is resolved in China. Nothing. It's still a disaster in terms of their real estate market, in terms of the risks to the downside. Now, we are seeing some economic data improve a bit in terms of industrial production, in terms of inflation, but I would say they're still not anywhere close to out of the woods. So, you know, you'll get your trade opportunities if you're wanting to trade Chinese stocks, and there'll be outliers like Pinduoduo who legitimately are seeing growth. But overall, it's not a market that I'm very excited about. I'm more excited about emerging markets ex-China, quite frankly. So we are seeing some more weakness coming in, some sellers starting to take S&P a bit lower here. We're trading down just about 0.14% on the S&P and about 0.25% on the NASDAQ here, about 1/3% on the Dow. And the VIX has a tepid gain. Let's take a look at the NASDAQ. I like to look at the NASDAQ as our momentum leader because often is the case, and this has really been true for quite a long time. You could argue the better part of 10 years, but most especially important to us looking at this in shorter time intervals, since the October 2022 lows, the NASDAQ's been a very important momentum leader for this market. And so watching what the NASDAQ's doing on multiple time frames, I think, is even more important than the S&P. It has everything to do with leadership. The leadership in this market, it's all NASDAQ stocks. So when we're watching for where the market's going, if we're not seeing this bigger broadening out, which in many ways we're really not to the extent we should if we're making all-time highs, nevertheless, that leadership is concentrated in the NASDAQ. So watching it more closely gives us a better idea for what the market's thinking. And we still haven't broken out of this range here on the NASDAQ. Probably worth watching, really, just to make it a nice even number, 18,500. Taking that out probably gives sellers some more conviction to push this lower. Similar look with the S&P. Really haven't broken that range as well. And we see the midpoint coming up on screen because the advanced SPX options visualizer is showing relatively even distribution between puts and call volumes. We do have the resumption of Fed speakers is upon us, right? I know everyone's looking forward to that, the never-ending parade of Fed speakers gracing us with their infinite wisdom and foresight. We've got Barr coming in at 12 p.m. and Bostic at 4 p.m., so look out for that. I don't expect we'll hear anything too divergent from what we heard from Powell, which was, it was a little surprising, quite frankly, how dovish he was in the face of what appears to be some degree of resurgence of inflation and resilience in this economy. Almost as if the Fed's primary role is just monetizing the government's debt. Speaking of which, let's take a look at the 10s here, see if there is any interesting price action here. And there is, to some degree. We're getting a bit of a rally here in the 10-year note, at least off of its lows. We have seen a bit of a, I'd say, a kerfuffle in rate markets. I think people are kind of trying to decide what the longer-term outlook for growth and inflation is, and looking at the Fed, and okay, we're saying we're going to slow our roll on QT. So on the one hand, that eases some of the supply concerns, but on the other hand, we're still seeing stronger economic data, stronger inflation data. Those upside surprises have been a theme. The other thing about the tapering of QT that is it still remains a little bit of a mystery as to exactly how that all is going to go. But we've heard various ideas. Williams has said, let's sell MBS and buy bills. Powell has said, let's shorten the duration of the balance sheet. We've heard from the Dallas Fed president that there's a certain, basically a cap they're looking at in terms of reverse repo levels. And it just all kind of tells us they're not exactly certain what the plan is. There's trial balloons being floated right now to determine what that plan may become, what may take shape. Seeing some sweeps for Micron 120s for April 19th, about 165,000 in premium paid for those calls. And Nvidia 950s for next Friday, 119,000 paid for those calls. That action continuing to target higher prices in Nvidia. We'll take a quick look at the stock here. And looks like buyers were able to take out that resting liquidity at 930, and then we had a little bit of a retreat here. That 930 level has now become the point of control because that was a very large order, right? You can see it in the session volume profile over here. And so that helped to pull up that point of control. Let's see if we're able to take prices above there. And that makes it more likely that we start to see some of these higher offers taken out, but 950 is a pretty juicy one. I don't think we'd break that. In fact, if anything, Nvidia is looking just a little tired right now. So let's see how it consolidates this sort of reversal. There was really decent absorption here when it moved lower as well. So that's another important point. There are buyers ready and even just bidding right at VWAP. So other folks are probably watching this VWAP as well. Nevertheless, S&P not really mirroring the look of the NASDAQ.
Sorry, but I didn't mean to interrupt you, buddy. I was just jumping in to say hi. Happy Friday morning to everybody. Thanks for your comments and analysis as always, man.
Yeah, how's it going?
Going good. I'm in a little bit of a different realm this morning. I was focused on trying to play the DWAC merger news with Trump's media group. So that's had my attention this morning. Is that stock soared up close to $47, and then after the merger went through, it's now selling off quite dramatically. So I've been watching that, which is a rather interesting development. Sunk about 20% from its highs after the vote went through to merge with Trump's media company, which is very interesting. So a bit of a sell the news event here so far.
Let's put that up on screen here. Oh, yeah. I think Trump gets a decent chunk of the proceeds, and we know he's going to have to sell those shares to make his appeal bond. So maybe that's part of the thinking here.
I have no idea what's going on, but it is rather interesting. You know, as I've been trading more single names lately, this is one I didn't talk about yesterday because I was afraid of this and I didn't want anyone to get hurt. I don't have a position, but I was watching here to look for an opportunity to buy some lows simply for all that liquidity that you can see on your screen. There's a lot of interest in this name higher, but right now the reaction after the vote went through has been quite bearish.
That is interesting indeed.
Yeah, and a lot of times with these setups, it's worth looking at sympathy plays as well. I'm not seeing any movement from like Rumble or any of the others in sort of this space yet this morning. They are sort of moving together, which is interesting. Watching Rumble get smacked down on the DWAC news as well. But always fun stuff in the single name world, trading events and catalysts like this.
Yeah, no doubt. And Funware, another sympathy stock for DWAC. It looked like it had the pop and drop as well. Got as high as about 1031. Now trading down 3.10% to 970. So a lot of those same stocks just not having a great day.
Definitely not a great morning for the political based stocks. Anyways, just wanted to say hi. I was listening to your analysis here. Not a whole lot going on the S&P. I'm trying to catch this opening range low breakout. That's the only thing I'm interested in today. It's right here, right now. I didn't see a whole lot notable from the 0 DTE markets. They got it pretty well covered on both sides, which means I'm not expecting a violent move. But if we can catch a little intraday short here down to that first extension on the opening range, I'd be pretty pleased with that.
Yeah, it's similar with the full chain options volume. We've got the midpoint on screen from the SPX options visualizer just telling us that between the top two puts and the top two calls, volume is
China
balanced
Premier
within
Li Kang
20%.
will strictly prevent risk of newly added debts.
So that's interesting there too. Now we do have a decent amount of interest down here. If we're looking at the most active put strike in SPX, translating that to ES levels, just around 52.81.
Yeah, these are always tough scenarios for me, though, as price basically sits at the halfway point between the two big walls. Really tough trading. So if you catch a short here on the opening range low downside, I am more inclined to get out of that and pay myself quicker in this scenario when price is sort of sitting at that midpoint between the big walls, likely to see a snapback in the other direction, even if we do shove down lower here.
Yeah, I agree with the that's one of the reasons I built that midpoint tool into the scanner here. And it's interesting because we see that convergence between the midpoint and the point of control and the VWAP. So it just gives it a little bit more significance. And for folks out there that aren't seeing the screen, that's just around ES 5300.
I think another interesting factor to look at today is we have a bit of a hard top type intraday candle on the dollar, which is unusual. There's sort of a brick wall at 104, 425. For those of you that pay attention to what the DXY is doing intraday, it finally peaked above around 750-ish this morning and looks to me, I'm not a forex trader, but it looks like maybe some stops were taken out there and it immediately violently reversed in the other direction. So it's been really wild to see that. If that holds, that would make me more inclined to be looking to either buy dips or get out of short tactical trades a lot quicker if the dollar is going to pull back here. Had a really strong day yesterday.
Yeah, the euro also kind of showing some resilience overall here. So that's 70% of the US dollar index. It's always interesting to watch that, as well as the tens. We can see that there's an inverse relationship between the price of the 10-year and the price of the dollar. They track well with rates, the dollar and 10-year rates. And we can see the 10-year off of its lows. So that's giving the dollar reason for a bit of a reprieve as well in terms of the price of the 10-year and that inverse relationship with the dollar. So another factor that sort of confirms there could be some more downside risk in the dollar here, just on this intraday basis based on what we're seeing.
Yeah, and again, that makes me the appetite for trading long gold is pretty high for me right now, but I really want to see it get above 2185. That same level I mentioned yesterday. I took a stop out on it yesterday. I just had no sense fighting the sellers here, but if you're looking for a dollar trade besides ES, I think gold is really interesting how well it held up considering the incredible push we saw in the dollar yesterday.
Yeah, the relative strength in gold is very interesting here. It's something that we talked about during the midweek update, that divergence away from its relationship with the price of 10-year notes. And it suggests there's a lot of interest in gold. It suggests that people are extremely bullish here. We saw the flows in GLD, SLV, and GDX confirm similar. Those volumes have been very high. So, a lot of folks missed the rally in gold. They got the headline. Now they're starting to get into it, and that could give it some more room to push higher here. So it is a really interesting commodity to keep an eye on. And certainly gold, in my view, is a hedge against fear. It's a hedge against uncertainty, not as much inflation. But when we see geopolitical risks rising around the world, in the Middle East, in Haiti, in Ukraine and Russia and elsewhere, that does give gold cause to get bid. And then the potential for a policy mistake by this Fed cutting into a strong economy and resurgent inflation, probably giving gold a bit of a bid as well.
Yeah.
Oil coming up off of its lows here as well, just challenging VWAP. Still bullish of oil, but it was due for a pause and a bit of a pullback, so this is healthy price action. And the NASDAQ getting pretty close to the bottom of its opening range. Seeing some resting liquidity build up there on the bids below there as well. And the Russell taking out the bottom of its opening range here, it would appear. Yes, indeed. In fact, the Russell just free falling, just not even looking any other way but down. And that's interesting because the small caps were really surging earlier this week.
Yeah, I'd be on high alert for a reaction here, though, as it comes back to that key 2100 pivot. We talked about that earlier this week in the midweek update as well. That level has been such a beast for small cap futures here. I'm watching to see if we get a bounce, and then I'd be interested in taking a long trade, believe it or not.
I can believe it. There's been opportunities on every which way of this market. It has been absolutely crazy, but also a lot of fun to trade. And yeah, we did talk about that level, and we're just about 2 points above it right now, so worth watching here.
I think we're going to see some buyers step in. We're seeing buyers step in on ES, broke through the opening range, but immediately seeing buyers come right back into it. So very interesting.
Similar, NVIDIA just got reflected off that 930 level. They took it out, but really hasn't been able to stabilize since then. We saw a lot of call sweeps coming into NVIDIA 930s and 950s, about 2 million of premium paid so far today for those, but hasn't yet been able to really push the stock up through those levels durably. Yeah, and as you mentioned, we're pushing through those opening range lows on ES here. We've got that on screen now. We do see resting liquidity starting to build below there a bit as well.
But that one order that just came up top, I have to zoom in on that. I think that's significant at 5305 because that looks algorithmic. They filled somebody right down here where we're at right now. You can see the big red bubble and immediately placed that order on above it. That could be a clue here that we're headed back up in a moment. I would like to see it push down through one more time to clear the overnight lows. There's a big exhaustive push right there on the Russell, pushing through that pivot level.
Let's put the Russell on screen here. Yep, there we are. Just down to 2098.50.
Yes, just took out the overnight low.
NASDAQ just seeing a little bit of bidding coming back in here, some absorption of sellers.
Just for whatever it's worth, on the 0DTE chain, it is very strange. At 5,300, you have retail speculators are massively long puts and massively long calls at the exact same strike. I've actually never seen anything like it.
Yeah, that is pretty interesting. I'm seeing that in the volume side as well. With full chain volume, largely where we're at spot around 5240 is where the most interest is between puts and calls full chain. But yeah, up there at 5300, that's pretty wild.
Yeah, somebody's up to something. That is strange. I've never seen positioning like that.
And we have seen just in full chain interest at 5300 has been growing as well on the call side, but also on the put side, as we've seen this market reach all-time highs seemingly almost every consecutive day. In terms of option flows in single stocks and ETFs, it is still decidedly skewed towards call premium today, where there is the most interest, and predictably, most of that is going into NVIDIA. But there is interest in Marvel, Micron, and other semiconductors as well, as that has been the theme. And of course, it wouldn't be a day in this market if there wasn't an unusually large sweep in MicroStrategy calls. Out of the money, 1800s, $350,000 in premium paid for those expiring April 19th. That stock is down 4.16% today, but off of its lows. And Michael Saylor simultaneously promoting Bitcoin but selling shares in MicroStrategy. Apparently, these are shares he had to sell because of options, but nevertheless, the optics did catch some folks off guard. We did get a nice pop in FedEx. Their earnings were not very good. That was one of the reasons that I took the position off completely last night, but also because it exceeded the price target for that swing. And it, quite frankly, happened faster than I expected. But once we get to one of those targets, I just want to capture my profits and move on, especially after seeing their earnings. And they were not impressive at all. I think the reaction was more one of a sigh of relief after hours, some shorts covering, other hedges being taken off. And we can see that that price action was faded into today as well. So FedEx was a good trade, but not necessarily for reasons that make sense. That's the sort of market we're in right now. Now we do see that resting liquidity below ES starting to build up here. When it gets this pronounced, sometimes it can act as support, and we have seen a bit of a bounce off of just above that 59 level resting bid, where there's 313 contracts. We also see some resting offers starting to grow above in ES as well. You can see that at 52.98 and change, as well as 53.05, 52.97.50, and so on. Let's take a look at the NASDAQ here. NASDAQ also just coming off of its lows, pretty much tested the bottom of its trading range and gave us a little bit of a pop from there. And we are seeing just a little bit of conviction from buyers. You can see that in the larger delta bubbles on Bookmap. But nevertheless, there's not a lot of resting liquidity building up in this contract. And that doesn't necessarily mean a lot. The NASDAQ is a much thinner contract. You can see the order book depth today is pretty low. It's about 5.1 thousand contracts. Contrast that to the S&P, where there's 35,000, and that's actually pretty low for the S&P as well. Usually you have 50, 60,000 order book depth. Take a look at some of these popular stocks. NVIDIA just sort of chopping sideways. That point of control pulled lower by sellers. Remember, it was up at 930 briefly when we had that really large transaction. When they took out that resting offer, there's 106,000 shares. We've seen just a bit of a consolidation since then. Let's take a look at its brethren, SMCI. Pretty choppy trading in SMCI. This thing did a dilutive offering, as I recall, scared some folks, but also we have increasing competition from the likes of Dell, HP Enterprise, and others who can ostensibly integrate the same products. Meta coming off of its lows here, just challenging that point of control from below. And Amazon showing just a little bit of strength after that recent drop, but overall looking decent. Microsoft, however, not so much. Microsoft getting pulled lower to a larger level of resting bid around 427 here. Microstructure, one of lower highs and lower lows overall. So a bit of an intraday downtrend in that one. Apple coming off of recent highs, testing 172.50, taking out the resting offer there, and now falling. And this is a company where the story that would make one want to be long is a bit challenged, but nevertheless, Apple having a decent day, but coming off of those recent highs. And then we've got Alphabet. Alphabet trading in the 150s. Remember when it was challenging the lower 130s and it bounced off that lower trend line, briefly took out the 200-day moving average for 2 days, and then popped right back like a beach ball held below water? This is an interesting stock because on the one hand, a lot of folks are losing faith in management, but on the other hand, they are really trying to improve their AI. Say what you will, Gemini is pretty terrible, but Google is also a company that has a lot of brain share. So if they want to turn this around, they certainly can. Tesla continuing to consolidate. Got a pretty big resting offer above us here at 170. It's just being taken out. Let's take a look at our friend DWAC. DWAC continuing to slip here, now trading 38.90. And across the world of commodities, I'm sure no one will be surprised to learn that cocoa is making yet another all-time high as we start to reassign what is precious and what is rare. Is it gold? Is it silver? Is it platinum? Or is it cocoa? Should we now just start to sell all of our worldly possessions and just buy cocoa beans? I'm obviously kidding, but the surge in cocoa has been extraordinary. It has to do with environmental factors, but it also has to do with speculative flows. Hedge funds are eye hole deep long in cocoa futures.
Market just anticipating a big Easter season, or?
Yeah, I mean, I feel like, all that candy that folks may have laying around, they may want to put that in the safe, just lock it away for later because it may appreciate in value.
Yeah, I'm long physical chocolate. No stops.
Yeah, this stuff. It's just been one of the most incredible moves I've ever seen in the commodities market. It was trading in the 2000s a year and a half ago. It has essentially quadrupled now. I mean, that's just an extraordinary move. It's moving like an altcoin. That is how cocoa is trading. That is the market we're in now. In fact, I'm sure if you made a coin, and someone's going to do this. Someone's going to do this because I said it. If you made a cocoa coin, that thing would be bonkers. People would buy it.
But I'm immediately going to outdo you by creating an AI cocoa
There you go.
coin. Yeah. So then there'll be healthy capitalism and competition.
Yeah, AI Coco coin, I love it. I feel like there's some promise in that. If we could have it be a token that you feed into a cloud GPU hosted presence, then it could actually have some applicability in real world commerce. And then, all of a sudden it's the first crypto that has a use case. AI Coco coin, buy your GPU time with it.
I'm all in.
There we go.
Sign me up.
It's happening right now. Airdrop's coming next week.
So this is a crucial spot. On a serious note for ES here, though, for the rest of my day as to whether or not I do anything. If we hit that first extension down, statistically, there's only about a 14% chance that the market will reach the highs or get up towards pre-market highs of 53.10, the other first extension on the opening range. So these next few moments kind of matter to me as we head into the European close from a probabilistic perspective. Buyers need to step in prior to ES breaking beneath 88.75. If they can do that, then the statistics are still intact for me, and I think it would be safe to look for long trades this afternoon, as we're seeing, again, tons and tons of selling, but if we're being honest, lots of absorption as well. Like, given the volume and selling between yesterday and today, price really isn't going anywhere. I mean, the market's only 0.22% down right now, so these next few moments are really going to matter. If they can break below that 88.75 level, I wouldn't be interested in long trades for the rest of the day because statistically the odds just don't support it. But
Yeah,
it's
that
2024. I've been proven wrong many times. We've had a lot of outlier days this year. Fridays are ripe for outlier days, so just a heads up to everybody. But either way, I'm still watching pretty closely here as we only have a few points to see buyers step in before one side of the dom, so to speak, is kind of off the table for me.
Yeah, definitely an interesting spot here. Appreciate your thoughts. Let's check at the NASDAQ here as well. Similar look, just a look of distribution, lower highs and lower lows in the NASDAQ. Russell trading just around 2098.20 here. Gold pulling back from that recent pop, but still overall looking constructive. 10-year note futures stabilizing after that rebound this morning. Euro starting to give up some of those gains, so dollar firming up here. Certainly not a good look for the market. And NVIDIA, the only stock anyone cares about now, trading 928.17, getting back up to a new resting offer at 930 that's back on the books. And remember, these resting offers are the largest where we're seeing the largest options trading, matching the strikes to a T. That is not a coincidence. Options are a very big part of what's moving NVIDIA these days. In fact, it's fair to say that NVIDIA, SMCI, and a lot of the other semis, Avgo or Broadcom, they're trading a lot like what we saw Tesla trading in 2021 with regards to how options are impacting price discovery in these stocks. In fact, Tesla, back then was the majority of single stock options trading on any given day, even though it was a fraction of the size of Apple or Microsoft or Google. It was trading more premium than those combined. We're now in the era where NVIDIA has become that stock, where about a sixth of single stock premium trading in options every day is trading in NVIDIA, which is incredible. But it also kind of illustrates the extent to which things have become hyper-focused on that stock. And skew for NVIDIA has come off of levels of extreme bullishness. Nevertheless, we're still pretty darn bulled up in the distribution of call versus put premium on NVDA. SMCI also has come off of its extreme of bullish skew, but it's still quite skewed towards calls in terms of premium. And MicroStrategy, wow, But what a difference a couple days makes. This thing had the deepest skew towards call premium. Let's see, this was March 11th and March 4th. The deepest skew towards call premium in MicroStrategy that we had seen since its peak in 2021 recently. That's now starting to come off a bit. Nevertheless, that's kind of insane. Shows you just how kind of offsides people were getting in terms of bullishness. Let's take a look at GLD here. GLD actually not that bullish on the premium distribution, which is a good sign for gold. It's showing us that, we're not wildly lopsided long GLD here. And if we look at commitment of traders reports and gold futures, it's a similar look. Yeah, they're long, but it's not long to a point that says, we're completely lopsided. In fact, traders were much more long, large traders were much more long gold in 2020 than they are now. So if we look at it from the view of positioning, it's reasonable to say that it's not stretched in precious metals. Now, GDX is a little bit different. If we look at the mining ETF, skew is very bullish. So perhaps less risk from a skew perspective in GLD than GDX. Let's take a look at SLV. SLV is still pretty bullish skew, but it has come off of its extremes. So of the three, GLD looks like the one with the least amount of euphoria. It's pretty conservative in comparison to GDX and SLV. Got some more NVIDIA call sweeps coming through 930s for next Friday, 152,000 in premium paid there, as well as Coin 275s, April 19th, 169,000 in premium paid for those calls. Adobe 505s for April 26th, 182,000 in premium. We're still seeing call premium paid and the unusual flows skewed way more towards single stocks on the call side than the put side for today's flows.
Yeah, SPX is getting a little strange too. I mean, this is where you want to see buyers coming in. Yeah, they saved the probabilities there. So we're still, the door's still open for a bullish up day here, especially as whatever's going on at 5,300 is really strange volume
Yes,
wise.
it is.
Somebody just came through. There's 18,000 SPX calls that were bought at 5,300 and 14,200 puts bought. Just strange. I've never seen this happen on the 0DTEs, and I'm not exaggerating. It is really bizarre to see them long puts and calls in such size at the same strike, and that means the dealers are short these. So I would definitely be careful out there today, especially now that we're back inside of the opening range. There's still a chance of a very outsized bullish move. As much as I don't want to say that, there's something strange happening at 5,300 SPX.
Yeah, and definitely a lot of conviction in the single stock call buyers as well. That kind of adds to that feel. We've seen on days where the unusual flows outpace puts by this much that often you do see bullish outcomes. So that's another data point to contextualize here. Let's take a look at the NASDAQ. NASDAQ, similar, seeing a pretty strong reversal off of its lows, a bit more than what we're seeing in ES so far. Coming up above the point of control and VWAP here, and we're seeing some liquidity building up above in the NQ contract for June. And Russell, well, Russell's doing what it does, which is basically nothing, but it's sitting there at 2100.0150 and starting to give us maybe a little bit of a look of buyers finally starting to absorb some of that selling pressure just around that. We kind of tested below your pivot, like you said, and now we're starting to get right back above it. So we'll be keeping an eye on the Russell there as well. 10-year note futures falling a bit more, so rates pushing higher on the long end. And euro starting to stabilize here, but it has retraced much of those earlier gains. NVIDIA taking out 930 again. That was one of the key strikes that we saw aggressive call buyers targeting. We do see those same buyers once again pulling up that point of control with the size of that transaction to absorb that offer. So that is somewhat bullish for the NVIDIA bulls out there. SMCI stabilizing, not looking quite as strong as NVIDIA though. Meta starting to give you a little bit of a look of that microstructure uptrend look, higher highs, higher lows, just testing the point of control. Amazon consolidating, Microsoft starting to look like it's trying to reverse here. Apple starting to consolidate, but the buyers were able to do one bit of heavy lifting here, pulling up that point of control pretty significantly to about 172.13. And Google having a nice run, just continuing to push higher here. There's a large resting offer at 152 on this stock. And Tesla just sort of consolidating here. This one has been the least favorite of what were formerly called the Magnificent Seven. And I think now it's just like the Terrific Two. It's really just NVIDIA and Meta that are really leading the way. Go back to the S&P here.
Well, this is going to get weird this afternoon. That is a poor low on ES from just a few moments ago. Not likely to hold. I don't like seeing those poor lows. But if you're concerned, the way that I'm playing this, since I know I'm not going to be at the desk this afternoon, as our spring break has started, if you look at the SPX option chain, the options for 5,300 calls, 95, 90, 85, and 80 are all trading essentially the same spread, 5 to 10 cents. So if you're bearish overall the market like I am, but concerned about an extremely outsized move, that instead of going for the 5,300 calls, you're going to pay the same price to get strikes closer to the money because the spread is the same, 5 to 10 cents all the way down to 85. You might even be able to get filled at 80. I did purchase myself a small handful of those. I'll happily let them go to zero if nothing happens, but the risk reward to me is really good considering the really strange activity happening at that strike where that gamma is not likely to really be impactful till this afternoon. So while things look, pretty dire at the moment as everything sort of pulls back as the market opens, I wouldn't count out a strange outside move into the close today due to the massive positioning up there for really seemingly no reason. That's a very long way away.
Yeah.
And I can't really understand. I know I've sent you a screenshot or two, but I can't really understand what's happening. But I know the power of options in gamma, especially as time ticks away into the afternoon, it might be worth a couple 5-cent contracts if I can get filled on those as a hedge against any bearish positions I have on.
Yeah, and we talked about a little bit earlier on the Discord that as long as NVIDIA is up, this market has a bit of a chance of following it. So I agree there's that as well. And we see it in the single stock and ETF call flows, really calls outpacing puts almost 2-to-1 on the unusual activity. You can see that in the Discord on the signals stream where we have that available for everyone to watch in real time as they come through. And that's pretty good. That's been a pretty good early indicator as well. So I agree. There is that risk of that bullish reversal today based on everything we're seeing.
Yeah, especially, let's not count Google out. Google's up almost
True.
2.4% today.
Yes.
Amazon's green, Nvidia's green, Apple's green. There's an appetite for big tech today.
Yes. Yes, absolutely.
Yes, rejecting its big green line there for the day traders. To the tick.
It's amazing how powerful that BGL is.
Yeah, super helpful for intraday momentum at least.
Absolutely.
Good for confirmations.
Now, underneath the surface of the market, let's take a look at some of the internals here. We've got not the best breadth so far. Now, obviously, it's early in the day and a lot of things can change, but at this moment, 28.7% advancers versus 65.2% decliners. About 66.2% of stocks across US listings are above their 50-day moving averages and 68% above their 200-day moving averages. So the real concern is just the advancers and decliners. We could obviously see breadth improve throughout the day, but we also know we can rally on just a handful of stocks as long as they're the highest weighted stocks. Underneath the surface, weakness in financials, healthcare, consumer defensives. The heat map for the S&P pretty red, but spots of green in Nvidia, Broadcom, Google, and Apple. And also seeing some strength in aerospace. In fact, Boeing is up. I'm not sure if that's legal, but it is happening. Raytheon's also up, as well as Lockheed and General Dynamics. And of course, as we all know, FedEx is having a decent day. We see ES just coming up to the midpoint. That is calculated by looking at the two most active calls, the two most active puts when they're within about 20% volume of each other, and splitting the difference. And this ends up being a pretty interesting level a lot of the time. And if we look at the auction as a three-way auction, you've got a market where demand exceeds supply. That's rally. You've got a market where supply exceeds demand. That's a sell-off. And then you've got a market imbalance. And the options flows are kind of suggesting that. We've got a market that's a bit imbalanced right now. And the price action is sort of suggesting that over the last, I would say, hour or so as well. More sweeps coming in for NVIDIA, 930s, 152,000 paid for next Friday. And then Marvell, this is a little bit out there, May 17th, about 160,000 paid for the 70 strike calls there. So as we've been talking about, semiconductor call buying remains a theme. This has been really strong for a while, but it's been picking up significantly over the last several weeks. We do see some resting bids building below us in the ES contract, one of them matching up well with that hot put, the most active put strike in SPX translated into ES levels with the advanced SPX options visualizer. That's something you can find on the Bookmap Marketplace if you're interested. And we've got 421 now on that bid. And then just below at 52.77, we've got 407 on that bid. We do see some resting liquidity building above as well at 5,300 and 5,305. Now, just last week, odds of a June rate cut were actually below 50%. We're seeing those odds be recalculated in light of probably the more dovish than expected Fed meeting. Those odds have now improved, and we're looking at, let's take a look here. 71.2% odds of a cut by 25 bips at the June 12th meeting by the Fed. And yeah, we are, as Horst sent me a message off mic here, we're seeing some unusually large sweeps in SOFR futures, and that is a bit of repricing of the Fed once again. And I think it does have everything to do with the Fed not really reacting to a strong economy, to a relatively strong labor market. Obviously, there are signs of weakness. There's a lot of temps being fired, but at the surface level, the ratio 1.3 jobs available for every unemployed person seeking work still suggests a tight environment there. And then on the other side, price stability, the other side of the dual mandate of the Fed, not necessarily accomplished with CPI month over month accelerating and year over year base effects from energy that were beneficial to subduing inflation rolling off. Nevertheless, the market is repricing this Fed, and it's pulling forward that first cut to June once again. July with the 25 bips cut, those odds at 85.5%. And then September, not quite as certain for that second 25 bips cut, just about a coin toss odds at 53.8%. And this is interesting too. This market is still pricing in 3 rate cuts for this year, but it is looking for 2 more next year. The Fed's dot plot suggested 1 next year and increased the median rate to 3.9% from 3.6%. So we're starting to see a bit of a disagreement again, right? We saw the market kind of come into line with the Fed, their projections from the December SEP into the March meeting, but then after the March meeting, we're starting to see a more divergent view from the market, leaning more into what Powell's demeanor was and what was said, and sort of ignoring some of these signs underneath the surface rather than what the dot plot was illustrating, which is basically that they're pricing in less overall cuts and that upside risks for inflation are now the dominant concern among voting members. Now let's go back to the twos here, take a look at that. And yeah, you've got a bid coming into 2-year note futures. This is a pretty decent proxy for the market's opinion of the Fed as well. And so seeing that bid there is just giving you another sense that the market's repricing the resolve of the Fed a bit today. Going into next week, we do have some pretty big auctions. We've got 2s, 5s, and 7s. 2-year note auction will be on Monday, 66 billion on offer. 5-year note auction will be on Tuesday, 67 billion on offer. And that 7-year note auction will be on Wednesday with 43 billion on offer. So it'll be very interesting. Those will be a bit of a litmus test post-Fed for the appetite for that sort of middle duration U.S. sovereign debt. Go back to ES here, and we'll zoom in a little bit more. We may be going back into a moment of one of my favorite video games that was just released this year. It's Paint Simulator 2024, Paint Drying Simulator. Let's take a look at the NASDAQ as well. Again, NASDAQ making, it's the high beta beast cousin of the S&P. And it is making a more convincing case of a potential reversal here, at least so far. Russell just can't get off the mat, is struggling at that 2100 pivot, but a lot of absorption of attempts to push it much lower than that. Crude still consolidating. Sorry, go ahead.
No, I was looking at the same thing. I think out of all the indices, I'd actually be most interested in trying to buy this dip on the Russell, given the absorption at the lows. ES still has poor lows. For some reason, I can't ignore the Rusty here.
It does look interesting. There's definitely an appetite down there.
Those big bubbles are noteworthy, right? I mean,
Yeah.
those are very large buyers stepped in right as we cross below that pivot. I like the risk reward on a swing attempt here.
Yeah, that's the largest delta on the buy side that we've seen all day.
Yeah, it's really, really weird stuff today.
And we know that, you know, the Russell is sort of the anti-NASDAQ in terms of hedge fund positioning. So if the NASDAQ was to see any negative pressure, often is the case, the Russell gets a pretty outsized short-term bid. So be interesting to watch that dynamic as well here. Like this sort of price action, particularly as the NASDAQ is starting to rise, also suggests a bit that, you know, hedge funds are leaning back into their favorite short, but they're so darn leveraged. If we look at gross leverage for hedge funds, it's anywhere between 280% and 260%, depending on which prime desk data you're looking at. And a lot of that macro product short leverage is expressed in things like IWM and RTY. So it makes it a very volatile trading product because basically the Russell's price discovery is at the whims of folks that are covering and then other folks who are nibbling at the edges, getting more bullish of small caps as risk appetite has been pretty robust in other parts of the market, and maybe it will start to spread to small caps. We'll have to be paying close attention here. Certainly, if I was in the position of being a hedge fund trading desk right now, I would not want to be massively short the Russell as my big balance against the NASDAQ. I think that is a risky proposition.
I got to jump off here, but thanks for letting me join in and sit in with you, everybody. Hopefully everyone has a wonderful trading day on this Friday. Really interesting start to the morning. I will be out next week for spring break. It's our kids' spring break starting today. I don't know if anyone else's families are starting that as well, but I'll be in and out as I can. Just got a lot of stuff going on with the family. So if you have spring break next week as well, I'm wishing everybody a very happy spring break. Chance to spend some time with family away from the screens and all that good stuff that keeps us refreshed. So thanks for letting me chat with you all today, and hopefully everyone has an awesome trading session.
Yeah, thanks for stopping by, my friend. Enjoy the rest of your day.
Sounds good. See you soon, everybody.
Seeing a little bit more pep in the S&P, but still no real conviction by either side. Those deltas that we're talking about in the Russell, that's the highest conviction we've really seen, comparatively speaking. A lot of absorption of those lows by buyers, so something to keep an eye on. And NASDAQ, of all of them, really looking like it had the most believable bounce off of those lows, but seems to be losing some of that momentum here. And I think the NASDAQ's really keying off of NVIDIA and some of those peers in the high-tech space that have been surging. Look at NVIDIA pushing above that 930 resting offer. It took it out pretty handily. The options flow in NVIDIA has been pretty heavy today on the call buying side. And now we're seeing some of that spread out to other stocks. Coin now, the 257.50s for next Friday, 110,000 premium paid for those calls, as well as the Netflix 640s for next Friday, 157,000 premium paid. And calls continuing to outpace puts in terms of unusual flows in single stocks and ETFs. Microsoft giving up that attempt to reverse, though. So this is not a widespread rally in tech, at least yet. Amazon looking comparatively better. Meta trying to reverse here. Apple showing some real strength, taking out that 172.50 resting offer above. And Google stabilizing, but consolidating some pretty good gains on the day. Tesla still looks weak, but not really doing much here other than kind of a sideways move over the last half hour. Now we'll just check in into DWAC for laughs here, stabilizing, seeing some decent absorption at those recent lows. Euro showing just a little bit of a rebound off of its lows as well. We know those intermarket dynamics are important. S&P, about 40% of its revenue comes from overseas, so a weakening dollar tends to be bullish for those same stocks. And gold slipping from its highs, falling below VWAP. Let's see if it gets some stabilization around this point of control here, but still an interesting one to watch. Let's zoom out on the advanced SPX options visualizer, get a better sense as to where there is interest being expressed in prices here. We can see this is the second most active call on the chain, and there is resting liquidity on the offer building here at ES 5310. So this is the second most active call on SPX, right? And it's catching up pretty quickly to the most active. And we can see that in ES, where a lot of market makers are hedging that SPX options exposure, that full chain exposure, we see a resting offer building above here, right? Right at that same level. This is what we call convergence, and it makes that level even more important. If we were going to be trading it as a long target, I wouldn't be looking at 5310 as my offer on my limit order. I'd be looking more at 5309. Why? Because these levels can and often do act as resistance, and I'd rather get out a handle lower and have the trade filled than have to kind of go through a whole ride, get rejected, maybe get back up there. So I like to go with the probabilities, and so I'm always kind of going just a point or so below those levels. That's one of the ways I use the SPX options visualizer in conjunction with the heat map from Bookmap to get a better idea of where entries and exits can potentially be had. Russell starting to show just a little bit more signs of life here, but the conviction has been mostly down at this point of control. We saw buyers absorbing every attempt to push it below. They are not showing that same conviction up here, just 4 points, 5 points higher. NASDAQ continuing to trade towards the top of its opening range here. If we're looking at that as a 30-minute opening range, we've broken above. I'm just going to be keeping a close eye on the Russell as well, as I'm of the same opinion that watching how it trades here could be interesting for a potential long setup, at least intraday. Also watching these tens because, we do know that even though there's divergence in this relationship, the 10-year note futures are a key product. Lots of things key off of them, whether it's, very direct relationships like the rate of a 30-year mortgage or the pricing of the dollar, which tends to work inverse to the pricing of the 10-year note, or less direct but still important relationships like the intermarket dynamics between the 10-year note futures price and the price of the NASDAQ, the price of gold, etc. So this bounce back towards session highs is encouraging. It is supportive for some of those intermarket dynamics for gold, for NASDAQ, for longer duration risk, and a bit bearish for the dollar, which we'll check on next. And we can see the euro is gaining a little bit of strength here, but still off of its session highs. And we're just about 20 minutes away from the speech from the Fed's Barr. We'll see what he has to say. I think this is one of the first speakers after the Fed meeting. So we're out of the blackout period. We're back into the period of being saturated with their thoughts and feelings. Reddit stock still holding up pretty well after that massive rally yesterday, trading at 49.91. It popped about 48% yesterday and somehow managed to tie itself to AI, which quite frankly was really intriguing. This is not an AI company in the slightest, in any way, even at all. There's no Reddit offering that is even tangentially related to AI, but they have started to license all of the content that users generously contribute to the site to companies like Google in an effort to become cash flow positive. And so I think that the narrative has mutated a bit, maybe been presented a little bit disingenuously. Reddit's not a AI company, it's more a beneficiary of the value of content contribution. Now, will that content contribution be as generous when we see the types of gains the stock has been made predicated on AI and the sale of user data? That's going to be interesting. And I wouldn't necessarily say I'm bearish on Reddit per se. I would just say that the type of environment that we're in right now, we're starting to see IPOs come back. They're having huge pops. The narratives are a little exaggerated. It does feel frothy. Lululemon, one of the darlings of the market for quite a long time, sinks 15% on slower U.S. store traffic and a weaker outlook, showing some signs that even the higher end consumer is a little tapped out on wanting to buy yoga pants. Nike is also down 8.24%. Aging sneaker models feel the heat from upstarts of, other companies like On and Hoka. Probably pronounced that improperly, showing my age, but yeah, Nike not having a great day either. And Tesla trims car output in China as EV sales growth slows. Stock is trading down about 2%. We've been talking about it a bit throughout the session. Tesla's had a lot of issues. It really does feel like it is more of a traditional automaker at this juncture. Yet the valuation has yet to really realize that. But forays into full self-driving and robotics and otherwise remain a little elusive to be captured into the here and now despite years of promises. And patience by investors seems to be running out. Even us retail folks are not favoring Tesla as much as we had. Those same flows are going into, yep, you guessed it, NVIDIA. Overnight, we also had some interesting news out of China. Foreign exchange markets for the Chinese currency suffered the worst day in 2 months as the central bank fix was much weaker than expected. Now, you could look at this one of a number of ways. On the one hand, it makes China's exports more attractive. On the other hand, it could cause them to import more inflation, and importing inflation is not necessarily as desirable as being able to spark it internally from wage growth. Like if things that are coming in are more expensive, but there isn't the economic growth to offset that, that can be somewhat problematic. So we'll see how that all plays out for China. But their currency has been, well, it's been slipping for quite a while. So this jolted markets a little bit.
Block trade and ticker, WBD.
That is Warner Brothers Discovery, a block trade on that stock, which is trading down 2.27% today. This one's been a disaster since it had that spinoff. It had traded as high as $25 in 2022. Now it's trading about a third of that price, down 65%. And as I suggested a little earlier, S&P looking a little bit like Paint Drying Simulator 2024. You can certainly see that here in the way it's trading. NASDAQ giving us a better trade off the bottom, but it's got back to the top of the range and was rejected. So are we going to start to see this pull back down? Let's take a look at some of these other intermarket dynamics to get a sense. Russell also not finding the strength to bounce meaningfully from that point of control, where we saw some pretty decent absorption. Crude moving sideways. Let's look at the 10s. 10s kind of consolidating after we saw a run from pre-market to the present. Euro, pretty weak, consolidating overall. Not able to hold on to those earlier gains. NVIDIA reflecting off that offer around 940, 950 remains the big level on that stock. That's where a lot of interest in sweeps has been expressed. on the call side, of course. SMCI, nice little pop there. Popping off of VWAP, dragging up the point of control, and a decent amount of volume, and getting all the way up to that 985 resting offer and absorbing it. So a nice bounce in SMCI. Meta slipping. Amazon as well, slipping a bit back following the major indices here. Microsoft not having a great day overall, just lower highs and lower lows since earlier. And Apple stabilizing, but that DOJ antitrust lawsuit giving investors a bit of concern. This company has struggled over the last 6 quarters to grow sales and earnings when you net out buybacks. And really the engine of growth has been their walled garden, you know, or I would say not even the engine of growth, the engine of stabilizing revenue and earnings has been this walled garden that they have for their apps, for their hardware and otherwise, and that seems to be under attack not only in the US, but by the EU as well. And Google slipping a bit from its earlier highs, sliding below VWAP and now the point of control. And Tesla had a nice little pop here, but now starting to drop right back down, found support at that 169 area where there was a large resting bid. So buyers were able to pull up this point of control, but now we're starting to see sellers pull it back down a bit in S&P. We still have that very large resting offer above us here that correlates well with that. Now what has become the most active call strike. Before that was the second most active, but we see it outpacing what was the most active by now 1,000 contracts. And we could see some resistance around this gamma 2 level. This is where there's the second most gross gamma positioning on the SPX chain. We can see that's acted as a level of resistance prior as well. So something to keep an eye on, and one of the reasons that we have this advanced SPX options visualizer as a tool, because we know that the options chain has an influence on the price discovery with, you know, throughout the market. This is in SPX alone, 1.2 trillion in notional trading every day. And when we look across US equity futures as a whole, it's about 400 billion of notional trading. So there is a pretty stark contrast there. Can't ignore the options market. Or one can, but potentially to their own peril. So we are approaching lunch hour, which is usually kind of boring. Volume tends to drop off. You know, statistically, not a lot of the major moves that hold happen during that time. And for me, I'm also starting to get a bit hungry, so thinking about fixing myself some food. So I want to thank everyone for tuning in. Hopefully this has been helpful to you in your trading process. If you have any questions for me, you're always welcome to reach out. And I hope that you all out there have an awesome weekend ahead.